Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, September 25th, 2020. We'll do a brief update on the equity markets. Decent move in the markets today, but really not any technically significant changes to the posture of the charts. So we'll touch on that. Quick update on gold, silver, U.S. dollar, and I'm not going to go through all the commodities. I did that yesterday. I'll just do a follow-up on the one that stood out to me as offering an objective entry yesterday, and that was coffee. Nice lift in coffee today. Okay, starting out with QQQ, bigger picture. Well, not the long-term chart, but the intermediate-term picture. Shorter-term charts. We broke this trend line back here. We first had the sell signal with this break of the minor trend line. That was September 2nd, I think it was. 3rd, one of the two. Breakdown. We've been zigzagging lower since, but for the first time since the March lows, I have not highlighted bullish divergence on the 60-minute charts since the March lows, but just before and just after, and that was obviously bullish back then. We had some long trade ideas on the site, caught that bounce, obviously didn't stay with the entire run, but this is it. So it's to be respected. I've given you my thoughts. There's a lot of what I call technical cross currents when I look at things going on in the longer term charts. Everything I've covered recently, some of the sentiment extremes and complacency in the market, and then that's countered out by this short to really intermediate term, a 60-minute divergent low, particularly during a bullish trend, a primary larger bullish trend, is often the catalyst for the next big swing up. So it may play out, it may not. The important thing is we never took out those lows the other day. That previous reaction low, I said we'd have to take that out. When QQQ went down the other day, it held and held above it here. We'll turn off all the lines you can see. So we remain above that low, and that's what we're going to need to take out, in my opinion, to open the door for another wave down of selling that will take us down to at least that potential T5 zone. So that's still it. The market so far defended support. The fact that the Qs were up 2.5% today or so, again, big move, but it's par for the course lately. What am I talking about? This is the new norm right now. Volatility has expanded. These swings you can see here by these daily candles here. One way to look at that too is you can put up an indicator on your charts called an ATR, or average true range. And the average true range measures the daily range. Now I have it set as an ATR with a 7 period. That means takes the average daily ranges of whatever you're looking at, in this case QQQ, over the past 7 days, and you can see during that big drop into the March lows, ATR shot up, and it's shot up recently, and it's still elevated. It's elevated levels, nowhere where it's not as high as it was during the initial leg down, but it's still elevated. And as such, where I'm going with that is you can't make much into a 2% rally or a 2% drop unless that 2% plus rally or drop breaks a key support level or breaks a resistance level and triggers a buy signal or a sell signal. Other than that, again, to go back to where we were here on the 60-minute chart and turn all the lines off, we're chopping around. We're still in a confirmed downtrend. So again, if you were short today, it didn't feel good to ride out a 2.5% counter trend rip. If you were long, it felt good. But again, it may not mean much. And look where we stopped today. We stopped exactly at that, almost to the penny, that 272.39 resistance level I've had here for a while. The high was 272.39. Can't make it up. That's what we hit, and right before the close, and we were rejected off that level. We stopped there the other day. This 60-minute chart. So these 60-minute candles, you can see what an intra-period pop, only to close right back on that, right a hair above it, 272.45. And so that essentially stopped it cold. What is that? That's gap resistance. That line's there for, there's other reactions to the left, but most importantly, it's technically speaking, it's not the bottom of this gap, because when you gap down, here's your close one day, and then you gap down. But it's these reactions. That's why I have the line there. You have reactions there, and you also have reactions to the left along the way. Either way, so that's the level I'm looking at as resistance. That if taken out, that's going to be bullish. So this is what we're looking for next week. As of now, we have this kind of back and forth. This is what I'm talking about. These are the recent ranges with the market going nowhere now for the past week or so here. And tomorrow, or I'm sorry, Monday, we're either going to get rejected off that level. If we do, on the way down, you can see 268.20 is still the first support level below. If that gets taken out, then that opens the door down to the lows again. We've already tested it. The bulls stepped in and defended exactly where they needed to the other day. They stepped in just shy of the recent lows and rallied it up. So far, if we're playing that near-term game, which I've been playing lately, near-term bullish, near-term bearish, well, they get a check mark for successfully defending that low and stepping in and buying. But if we get down there again, the safe play is to say that support is support until unless taken out, and that's true. But the fact we've already tested it once, I'd put pretty good odds that if we get down there again, we'll break it. But again, if you want, you want the safe bet, you wait to see it till that level goes before you add any short exposure. Well, take that back. It's an objective short there. The other way, if you think the market's going lower, is you can add shorts on bounces back to resistance. It's that simple. And where are those resistance levels? Well, they're right here on this chart. You have the 280-ish level right there, 280.30-ish. Again, the level we stopped at today, 272.39, so you could have taken one there. Remember, it's Friday. You take a long or short position home today, you have 2 extra days of overnight risk. The market will almost certainly gap up or down on Monday. There's your next resistance there, about 274.90. Okay, so we'll move away from QQQ, but just to reiterate, until and unless these bullish divergences are burned through or taken out, they need to be respected. And where could this take us? Look, it could be, as I mentioned yesterday, we haven't had a decent counter trend rally. I mean, these were little blips, and they're par for the course, these 3% or so swings here. Where could this take us? It would still be the maximum bounce target I gave you back here when the divergences started, and that's a back test of the trend line. So that would look something like this. Again, this would be, and it may change. I always say the charts are dynamic, and so is my analysis, so we'll see if and when it happens. But we could come on up here and still make a back test of the trend line. Now, before I had the trend line coming in where if these divergences had started to play out sooner, they would have back tested around this resistance zone. At this point in time, because trend lines come in at a higher price every day, if it's an uptrend line, if we're going to backtest that, that's quite a ways up. And it would actually mesh. Let me just measure it out for you, depending if and when we hit it. I'm just kind of guesstimating that would be on October 6th right there, if at that point where the crosshairs are. That would be about a 14% rally. And remember, I covered this one in yesterday's video. Turn off all the lines. Nope, that's not what I meant to do. Here we go. This one was close to that as well. We had a 11, I think it was 11 something percent rally, the first snapback rally once the COVID meltdown started. That was showing 10 now if I'm grabbing it right. I thought it was 11, but close enough. So either way, that would be potential target. Everything's potential, but if you get there at that point, you're going to be very close to the previous highs. So at this point in time, let's just see what happens, and that is, let's see if we can even get through this level. We've been checked here recently on numerous occasions right here, and so that would be bullish next week, just to take out today's highs. And of course, then that call it 275 level above is going to open the door to that. Otherwise, it would not surprise me in the least. Again, for the case I've been making on what's going on in longer term charts, sentiment, let's take a look at SPY. Let's move over there real quick, because it's not that SPY is not important anymore, but I've been putting a very high weighting on the FANG stocks, just watching those market leaders and seeing how they're acting here. SPY has the same thing you have on the 60-minute chart here. You have big positive divergence in place. On SPY. Actually not there. It's actually taken out on the RSI. The RSI made a lower low, but you have PPO divergence. I put up some Fibonacci retracements here as well, or I adjusted them from the previous levels, and you can see I had a resistance level at 335.12 right there. Add some reaction lows. That's your 38.2% retracement level, and then I have the 50% level right around my 340 resistance, as well. So those are all potential bounce targets in SPY. Whether it gets there or not, you can, I'm just going to have to wait and see what happens on Monday. Let's not read too much into it. But there is, as I've been saying recently, quite a bit of resistance overhead. So it's not smooth sailing. We've got these divergences. So far, the lows have been defended, at least on QQQ. But you can see the resistance levels overhead that the market still has to contend with. And I'll zoom out to the daily chart since I haven't covered SPY recently. We'll hit on IWM as well and then move on. On the daily chart, this was a big level back here, all the way when we were back in July. I was saying, yeah, blue line here, and I had a blue uptrend line and said the market, we need to get a sell signal on the market, we need to take out these blue lines. First, I had the horizontal line, and because we had a recent trading range here, we broke above it, and that was it. We never had a sell signal, so we hadn't had a sell signal on the daily time frame on SPY until right here. We broke it. So we broke that blue trend line. Now the blue uptrend line was so far away from this line at the time that was our sell signal, and now you can see we came down very close, reversed slightly above that 318.30 level. I still think it's an important technical level. Again, bulls and bears battled it out here for about a month or so, and finally we're able to break out above it, successfully test it, and move on up. So a big level. This is what bulls want to see to keep the bull market going, and can maybe even continue on to new highs. Bears want to see that taken out, and it just kind of meshes with what I've been saying here, a break of the recent lows. I mean, I should go to QQQ as well. QQQ, these were the levels back then I said needed to go 251.24, which never went. So we never had that sell signal there. We held it successfully. But you can see 264.82-ish, I'll call it, because we've had a few punches through there, slight whipsaws. But it just also meshes with what I'm saying. The market takes it out the recent lows. It's probably going to go down to those next support levels there. And if it can hold it, great. It still has some overhead resistance to contend with, but I've already spent time showing you what the upside targets and resistance levels are. So the end of the day, what happens next week? I don't know. Flip a coin. Near term, those 60-minute bullish divergences cannot be ignored, and that could easily be the catalyst for the next swing tradable trend to the upside. But on the flip side, everything I've spent talking about a long time over last week, including the recent bearish crossover on the PPO on QQQ right there. You can see I went over the history of all those previous crossovers, showed you big drops came after those tradable drops. SPY, let's see how we finished the week. We didn't quite get it. Let me move this line away here. No crossover yet. Close, but no cigar. So that'll to be continued next week on SPY. Let's look at IWM, and then we'll move on to some other things and wrap it up here. IWM, I was on a weekly time frame, so I'm just going to continue there. Pretty big support shelf right here, about 144.20. We had an uptrend line that was recently taken out. We back tested it and we've held it. We're holding that support. We hit it and held this week. You can see there's a weekly candle. Broke it intra-week and came back on it. And we're also just below these longer term trend lines as well. So IWM is in a kind of a technical juncture that I'm still leaning towards the downside because I see the PPO rolling over. It doesn't always cross. When it does, sometimes it looks like you're going to cross, you bounce, but then ultimately, typically when you get up here at these high levels, what I call, you get the high level crossovers on the PPO. You had one there. Looks like, unless IWM snaps up and rallies hard and turns the PPO back up, it's pointed straight down. You're probably going to get that crossover. You had a bearish crossover right there, and you can see what happened after that. You had one there, and that one didn't do anything. So like everything, this is why I don't bank everything on these. I point these out. The more of these you get on SPY, IWM, QQQ, in conjunction with other bullish or bearish technicals, the more check marks you have, and then the higher the probability is you're going to get that bigger move. Daily chart of IWM, again, these are the small caps, Russell 2000 small cap index. Pretty big support. I've had that purple line there, I think, for a while. Needed to break that to get a sell signal. We broke it yesterday by a hair. You can see that candle close slightly below the purple line, but we regained it today. So really no sell signal, just a little whipsaw yesterday. And again, to take a short signal in IWM with QQQ still holding above those lows, to me doesn't make sense. If the Qs don't break, if they hold that the recent lows, and those 60-minute divergences play out, QQQ is going to rally, and I really doubt you're going to see the small caps, go much lower with the large caps rallying. Sometimes they'll go in different directions, but lately this has been a market of inflows or outflows. Either everything's going up, especially equity, the different equity indexes, small, mid, large caps, or they're moving down. And then zooming down to a 60-minute chart, it was a while back, early August, I gave you a sell signal on IWM right there. On the break of that bearish rising wedge, following that divergent high, we zigzagged lower, and we put in a bullish divergent low there and had a nice counter trend rally. Again, these divergences will kind of help you navigate the bigger moves within. We finally went on after that rally played out. It ran right into that 156.23 resistance, then went on to hit my current minimum. Back at the time, that was my current minimum preferred swing target. So that's been hit. There's that little whipsaw. It's also very good support. I see a lot of support. I see a lot of reactions from below and above, well-defined support level. So this was a whipsaw signal. And that's been, I guess if I had to put one word as the theme for the stock market this week, it's whipsaws. There's a whipsaw there on IWM. So we closed back above it, which technically puts the near-term outlook on the small caps as bullish if that holds. But again, we're not up by a huge amount. We only closed slightly above it. But when you have a break of support followed by recovery, that's quite often bullish. Should we move down next week, especially if we take out the recent lows, and we're going to hit that potential target zone, which is would be the next, and at this point in time, the final target. Again, we'll see if and when we begin to even get there, how the charts look. And then at that point, I'd let you know if I think there's going to be more downside, or if that would be it, and that's a good time to go long, cover shorts for the next leg up. Okay, on to gold and silver, and to do that, my focus is largely on the U.S. dollar. So I pointed out a couple things. If you're just catching up, sometimes I'll recap because I know people don't watch these videos every day. Some of you do, some don't. There was a resistance zone right there. The bigger picture put the dollar, into it's been in a downtrend, but this bullish falling wedge with big positive divergence said we're going to probably have a counter trend rally, a decent tradable counter trend rally in the dollar, and that's what we had. So the wedge broke out here. We've been moving up since. After the breakout, we locked in a little trading range here for a while, sideways range, and then I said we need to break out below this, above this resistance zone, two lines of two resistance levels, and doing so would open the door for a move up to my 95,675 target. Initially, before it even broke out, I predicted there would probably be a relatively swift, mostly unidirectional move. That doesn't mean straight up, but little zigzags along the way. However, again, as I say, the charts are dynamic. So what's set up is since the breakout, I highlighted this uptrend line and a negative divergence right there, and we broke down. So far, we have a breakdown, but the divergence hasn't played out, nor has it been negated. In other words, I'm going to draw a line now. You can see that we made a marginal new high in the dollar, and so now these are what the current divergence lines look like. We just extend this one here. So the divergences are still intact. Sometimes you break down from a bearish rising wedge and that's it. You go and hit on whatever your target is, and that would be my target, either the top or the bottom of that zone or somewhere in between. And then sometimes you break down, you kick back. Sometimes you'll back test the wedge. This wedge is pretty steep, so if we were to back test, it's not going to come in for quite a while because this trend line is going to go like that. Close enough again. So watch this next week. I am slightly leaning towards this scenario, but again, sometimes these divergences don't play out, and we could continue higher. If it sounds like I'm waffling, this is where I think we're going. I'll maintain that target. It's just a matter of, do we do this first or do we do this? And if we do that, that should continue to put pressure on gold. This whole thing has put pressure on gold. I started calling for a pullback in gold weeks ago based on gold hitting resistance, the U.S. dollar, euro hitting resistance support levels. and of course this as well. So it all kind of ties in together, and it's all played out. It's not mere coincidence that the correction in gold is coincided with the biggest rally in the dollar in many months. That's just how it works. It's very simple. Gold, at least the gold you and I are buying here in the States, or even some other parts of the world, is based in US dollars. So if we're trading GLD, that ETF, that's based in US dollars. If we're trading GC, gold futures, that's gold out, gold represents a certain number of ounces of gold in US dollars. So if the dollar increases in value, it takes fewer dollars to buy an ounce of gold, and therefore the price goes down. If the price of the dollar sinks, it's going to take more dollars to buy 1 ounce of gold, therefore the price of gold goes up. So that's very simple. It's not, that's why it works. And you can look at any long-term chart, go back 20-30 years, and you will see that unmistakable inverse correlation between the dollar and gold. However, there are periods of disconnect where sometimes the dollar and gold are going up at the same time. Why? Well, that is showing you supply and demand forces are overwhelming. In other words, there's a strong bid for gold, and gold can rise even despite a rising dollar. So I just want to say this is not an absolute. There are no absolutes in trading, but it certainly helps to align your outlook in gold. It'd be very hard for me to be short-term, intermediate, and long-term, let's say bullish on the dollar, and then also bullish on gold at the time, unless the charts were that strong. All right, so let's leave it there. Let's see what happens next week. Partial to this. We don't have to go all the way back down there, but if we did, why am I talking about this so much? Because if we did, that would be an area, well, first of all, that would give gold and silver a reprieve. You'd probably see gold and silver rise on that correction, and if so, that might give you a good time to get out, or cover your positions in reverse. You don't have to trade the dollar. I only do this analysis to really confirm or refute my analysis on gold. And then you get this leg up, that's probably going to coincide with another leg down in gold and silver. All right, enough on that. Excuse me. Still suffering a little bit. I think I told you guys I tested positive for COVID. 2 tests in 1 week. First one was negative. The test yesterday was positive. So hopefully that'll be over soon. I'm 3 weeks into it, and usually mild symptoms, if these are mild to moderate, usually go away after about 2 weeks, 3 weeks. All right, silver here. This is a daily chart. I posted these charts today, so let's not spend too much time. There was your trend line break. There was your divergent high that marked the end of the run in silver. These are silver futures SI. There is some support around this level here, and if that, we get that extra leg up in the dollar to that next target there, then it could bring silver down all the way down here to that 19-ish level. Silver is a precious metal like gold. It tends to follow gold, but not always, and it also has more of an industrial component. They're both industrial and precious metals. But silver more so is more prone to what the economy is doing. Gold tends to have more of that flight to safety bid. Let's look at GC. GC gold futures. This is a 60-minute chart. You can see coming up on some support down there. 1843. If that breaks, 1815.60. Let me give you a yearly chart here. And this is kind of what it looks like, or this is what it looks like on the daily time frame, daily candles. We broke support there. There was what I consider to be a near term, at least a very near term blow off top. That near parabolic run in gold. It got very overbought, and my minimum target was always this pullback to this downtrend line, which was hit right away, and then the trend line broke. So did that 1911 support. So right now I have gold in what I call no man's land, at least GC gold futures, smack between support 1816, 1816.50, and resistance. So depending on what the dollar does and what gold does, of course, kick back to that level would offer an objective exit for anyone trying to game a quick long trade, or objective short entry for a move down there. Recovery of that level obviously would be bullish. And if we get down to here, that might be where I might be interested to start re-entering. Get interested in re-entering some of my longer term positions, which I closed out. I mentioned closing those out shortly before gold topped there when it was hitting long term resistance on the daily chart a couple months ago. Okay, and I know a lot of you don't trade futures, so this is what it looks like here. You can see this was a support, more so this second line here, 179.33 is where I have it. There was a gap there, numerous reactions on that level, and finally a breakdown what was that, last week or was that Monday? Well, there was you finally closed below it right there on Tuesday. Entered period break. We held it, closed about on the line, but then gap below. So same story. Gold GLD is also in no man's land, again, between resistance and support. And so wish I had the higher degree of confidence as to whether it's going to do that or this. But either way, I think this is where it's going, maybe down here. And again, this is where it may never get there, but if it does, this is where I will be interested in starting to add back maybe some longer term positions in the metals and miners. Of course, that depends on how the charts look at the time. I obviously it'd be better to see things like positive divergence on the 60-minute chart, maybe a selling climax on the daily chart. There's many other things, maybe a bullish setup, falling wedge, or other kind of reversal pattern, candlestick pattern, anything along those lines. SLV, similar to that chart I showed you on the futures. It's a pretty big void down below. I had this line here at about 2150 or so. Silver broke it, closed just a hair below it this week, and it's a thin zone down below. What I mean by a thin zone, you can't see it here. I have the lines turned down. This is called a volume of price histogram to the right of the chart, and I'll turn the colors up. They show you where trades occur at each price, and you can see the bars are very thin. I don't even need to have the bars on to see that was a breakout. We had a breakout right here in silver, and it just gapped right on through that level and then started consolidating. So what happens is a thin zone like this, where the bars are very short, they act like a gap on a stock where once entered, you usually fill them very quickly, relatively quickly. So we're not that far into it. It could still go either way next week, but I just wanted to point out for those of you that are wondering just how much more silver could drop if it doesn't reverse soon and rally. That would be it, down to about 1767. That would constitute a drop of about another 16-17% if that is hit. So PPO is right now back testing the zero line. This is one of my favorite trend indicators on a lot of different securities. Doesn't work on all of them, but many it does, and that is if the PPO signal line, this white line, 9 EMA, is above the zero line, the trend is bullish. I squashed price there, so just to show you this, but you can see it was a bullish trend. When it's below, the trend is bearish. Again, they'll turn off all the lines, park the RSI, just to give us a little space to work with, and it's pretty simple but effective stuff. So bullish trend, prices are rising. White line cross below and stay below to this point, bearish trend, and I'm sure that's double digits. It doesn't look like it. I'm using log scaling. We've seen some big moves. Silver was down as low as about $11 all the way up to almost 30 here on this chart, so that's why it doesn't look like a lot. Bullish crossover, started a new bullish trend, told you to stay long up until this point here. And again, easy stuff, not 100% effective, but pretty good to look at and confirm those trends. And there, if you got out of that one, you heeded the warning, boy, it saved you that quick drop down. And likewise, if you bought it when we crossed over here bullish, you caught all of this run because the line is still above. So you caught one of the biggest moves in decades in silver. But of course, when you get the PPO signal line this far away, waiting for the crossover, and this is why I don't use this as a standalone buy and sell thing, because when you get that far above it, look how much you've had to give back just to get back to the line. So I just want to point that out, that it kind of meshes with what I'm looking at on the charts. We're at price support or hair below, so it's do or die time for silver. If it can rally here, great. It holds price support, the PPO turns back up, maybe the trend's intact, maybe we go into new highs. Go much lower, you're going to flip that to bearish, and it could open the door for a lot more downside, but I remain at this point in time, for various reasons, including my longer term outlook on the US dollar, which is still bearish. I remain longer term bullish on silver and gold, and I can just tell you right now, if we get anywhere down close to that 1770-ish level, I will very much be looking to confirm long entries on silver in the silver mining stocks. We may not even get there, but if we do, great. it's going to be pretty big support, especially if it's confirmed with technicals at the time. And I'm sure some of you are wondering about GDX. Well, GDX, the miners are going to follow the metals. So if you want to trade GDX, I've always said this for years. GDX, or the gold mining stocks, are simply a leverage trade on gold. If you get the call right on gold, in other words, you can identify a 20-30% bull trend in gold, well, guess what? You're going to get 40, 50, 60, 70% or more in the mining stocks. Likewise, if you can call a 20-30% or more correction in gold and position and short the miners, you're probably going to make 2 times that or so. It's not a set formula, but because of their business model, they're very sensitive to the price of gold. When it goes up, it adds straight to the bottom line. Obviously, the miners have been correcting. We bounced on this level for a while, that 39.09 support level. Well, first of all, we broke the bearish rising wedge. There was a sell signal, make no mistake about it. Gap down, hit support, back tested. There was your chance, if you didn't get out then, to exit your GDX, your mining stock positions. We floundered around a trading range for a good month or so, but just recently, this week, broke down impulsively through there, and we're below that level now. That puts the miners in a precarious position right now because they broke that support. Now, they did hit the next support level, and maybe that'll contain it. It's a pretty decent support level, about 37.50 or so. So we're kind of smack between support and resistance. Where they go from here will depend on how gold and silver, most likely will depend on how gold and silver do in the coming weeks. Okay, and to wrap it up, last but not least, I said I'm only going to go one commodity. The only commodity that stood out to me yesterday, it's the only one that I bought into yesterday, was coffee, because of the reasons I stated. We hit my final target up here, almost to the button. Then we broke the bearish rising wedge. We had negative divergence, so the correction was indicated or priced into the charts, and it's been a heck of a correction. So we went from overbought to oversold, and when one fell swoop on that, and we came very close to, but a little bit above the support. But as I mentioned, this is an ETN. These ETNs do a pretty good job of tracking the commodities, and they're not perfect, but they're your only other option if you don't trade futures. I like futures because of the round the clock trading and other things, but these are not bad options. So if you're not a futures trader, you're not familiar with it, you don't have the account size to trade the futures contracts because they are leveraged, then JO is your vehicle. 3% gain today, and again, the catalyst, when I went over this yesterday, I said let's take a look at the 60-minute chart, which I'll pull up now for you, KC. And this is a 60-minute chart of a future. So you can see here when we zero down, this is where I like to hone down on entries and exits for my trades. I'll use the daily and even weekly charts to kind of paint the bigger picture. But especially on these commodities, any commodities, whether they're ag commodities or crude oil or anything else, I'll look at the actual futures. That's where the professionals are usually trading, and you can see it hit a perfect tag almost of that 108.60 support. You can see a lot of reactions here on that level. You see we broke above it, and we had tested it from above, and as I mentioned, the catalyst for the move was this recent breakout above the bullish falling wedge. So you had two things. You had a fall to support with positive divergence, broke out as pointed out yesterday, and a nice lift today up. The futures are up 2.74%. Just a quick note, coffee, like some of these ag commodities like sugar, they don't trade the same trading hours. They have quirky trading hours. They'll shut down early throughout the day, and you'll notice sometimes the ETNs aren't moving and all that, or they're moving very little, but they're not trading between 9:30 and 4 p.m. every day. They open trade during the night. They trade some of the hours during the trading session. I just wanted to point that out, because it might be confusing to some, or if you buy coffee or sugar or something late in the day and you notice it's just not moving, well, that's one reason. Those ETNs will continue trading, but not that. So anyway, that's it. Targets, I mentioned yesterday, I kind of just drew an arrow up here. I don't have any hard targets. I'm just more of I think we might see the next leg up in coffee that could even take out the previous highs. I'm just going to trail stops at this point. Move them up to entry at this time. If you bought yesterday, it's probably not a bad idea. If you get another jog down, if you're not in it, or if you are in it, that would still offer another objective long entry with a stop below. And at this point in time, I really don't see a lot of resistance, any solid resistance, until back up here, that 268.87, 26.87 level. So let's just point that out as the next potential target for KC or coffee futures. Okay, I'm going to wrap it up here, and I'll try to get a lot of rest. Doc had a tele-appointment today, and he said drink a lot of fluids, get a lot of rest. So hopefully I'll be feeling better next week, get back in there, maybe get some individual trade ideas out there in addition to the market analysis. Well, I mean, this was an individual trade idea, but I'm talking individual stocks. But I'd really like to get a better feel on which direction the market's going so I can align any trades, with the broad market where it's going to be heading. All right, this has been Randy Finney with Right Side of the Chart. Have a great weekend.